Looking at the numbers, certainly the bank reporting growth, profit before tax reflecting growth of 5% over last year's results. Certainly gone are the days of triple-digit growth that we had one point gotten used to out of Equity Bank. Is more modest growth what we need to start anticipating moving forward?
Thank you very much. That's a correct observation, but may not be reflecting what we should be expecting in the future. If you analyzed the figures well, this was a year that Equity focused on growing the balance sheet and growing the infrastructure. And on the area of focus, we achieved a 28% growth. At the same time, we were able to increase our outlets for service delivery by nearly 35%, 4 subsidiaries and 27 branch network. So we believe that we have laid the foundation for an infrastructure that will enhance the performance of the organization going forward.
Well, as you've highlighted, you've made massive investments in growing the company's asset base, that growing by 28%. Why have you opted to go down this route as opposed to ratcheting down the hatchets in a tough economic environment? Because this is effectively what saw your operating expenses rise 37% and pressuring the bottom line to some extent.
We saw this as a year that provided us with an opportunity for what we could have called affordable opportunities. When it came to expansion, because of the economic downswing, we could be able to negotiate better rental rates, so that informed the decision to open the branches this year. When it came to Uganda, we were able to acquire an investment at the right price. And setting up Sudan, because of the downturn, it was quite pretty easy. So that in a nutshell informed the decision. At the same time, prior to last year, we had just raised capital, so we were very well funded. And so we took the opportunity to lay the network. What is most exciting is that network is now showing early signs of starting to contribute to the bottom line of the bank.
Well, certainly Equity Bank is one of the most capitalized banks in Africa, so you're sitting on a pretty comfortable war chest that affords this investments getting made in new territories, in products and services as well. Over in Kenya, you're not sitting on your laurels either in terms of muscling up. We've heard rumors that Equity wants to buy all of state-controlled National Bank of Kenya. How do you see that contributing to the group's profitability moving forward? And is it something that you're aggressively pursuing right now?
That's not something you can aggressively pursue, because until it's put on the table, you can't open negotiations. However, in Kenya, we've decided to go very strongly on taking advantage of the convergence between banking and the telecoms. And we are seeing that as the future growth area. We are also soon going to roll out the agency model, which will be able to allow us to provide services very conveniently to our customers and at very affordable rates. So we see that as the next phase of growth, combined with electronic banking products that are very, very attractive, particularly to the youthful population of Kenya.
Of course, one of the most popular synergies that you've extrapolated from is your partnership with Safaricom, and that boding well for the group. And with that, I mean, this emphasis on getting to the market, a wider market first, is an imperative for Equity. We've seen some of that effect through these results. The increase in deposits reflected in your results today show that grew by 39%. At the same time, you're sitting with a loan book seeing 44% growth. What quality of loan book are we looking at here, where the risk of non-performing loans is ever present?
We are looking at an asset base with a P&L of only 4.7%. which is really marginally an increment from what it was last year. But in recognition of the fact that this was a challenging year, a difficult environment, we have increased our non-performing portfolio coverage through provisions by increasing the holding in the books from 1.5 billion to 2.9 billion shillings, and coverage from 26% to 43%.
On that note, James, we're going to have to leave that discussion there. Thanks so much for your time this